Hey guys, hi everyone. In this video, I'm going to show you a test of a strategy one found on another YouTube channel. Yes, I watch other people's YouTube channels, and I won't tell you exactly which one, because maybe that would violate some rights and YouTube might ban me. But maybe, after seeing the strategy, you'll figure it out yourself. So, I'm going to break down this strategy for you. I'll show you whether it's profitable or not. I'm going to algorithmize it, meaning I'll turn it into an algo-trading robot. I'll take the strategy from the video and turn it into an algo-trading robot, and show you how profitable or unprofitable it is. I'll improve it, and of course, I'll share all the source codes. They'll be available on my Telegram channel via the link in the description, so make yourself comfortable, give this video a like, subscribe to my Telegram channel, leave something in the comments to help promote my work, and meanwhile, I'll show you the strategy. Let's go! This strategy is based on just two indicators from the chart prime team. The first indicator looks like this. It's an RSI Momentum Oscillator that draws nice-looking divergences right on the chart and, most importantly, marks the levels where these divergences occurred. Its full name is RSI Momentum Divergence Zones by Chart Prime. And what's also important for us is that there are these curly brackets here, which are really helpful for creating automated algorithms from the strategy. This means that the strategy has open source code. Chart Prime are great. They often share the open source code of their strategies. They're just really awesome overall. Thanks to them for that. The main point of this indicator is to show divergences, meaning discrepancies. What is a divergence? Let's take a look. This is when the price moves. See, here's one peak, here's another, so the price is going up, but the momentum indicator, the RSI momentum, is dropping sharply. See that? So the peaks don't match up. This means that, according to the RSI momentum indicator, the market strength is already dropping, but the price is still being pushed up. And most likely, in this spot, we might see a reversal. But, as you can see, this doesn't always work. Yeah, here too we could have seen a reversal, but for some reason, we didn't. And now let's add a second indicator to our strategy. It's called Support and Resistance Power Channel, also from Chart Prime and also with brackets. So, it also has open source code. On the chart, this indicator looks like a green support zone and a purple resistance line, and they have relative strength, buy power 66, sell power 62. And they provide signals on their own. So, if we remove these divergences entirely, we'll see that when the price reaches these zones and maybe pierces through the zone, it marks that spot with a cross. And if after that the price moves in our desired direction for one or two candles, then this signal is confirmed and a purple diamond like this is drawn. And also a green one, right? Here you see a green cross, then after a couple of candles, a green diamond appears. That means the signal is confirmed. So, in theory, you could use these signals from this indicator. But, there's a catch here. And that catch is called repainting. In other words, it redraws the picture you see on the screen after the fact. That's why it's pretty hard to rely on its signals. I'll show you now what this looks like in practice. I used the strategy tester to cut out a piece of the chart, and you see, here they are again, those nice, neat little green signals. Looks pretty good at first glance. But if we wait a little, you'll see that after scrolling the chart a bit, it actually gives these signals much later. So as we scroll through the charts, you can see where these diamonds actually appear. So, they're nice looking diamonds, but by the time they appear, the price is already over here. And it's like, when the diamonds show up here, but the price is already way over there, they don't really carry any logical information and don't help us at all. That's why it's pretty much impossible to use the signal system as your primary one. Or at the very least, it's extremely difficult. So let me suggest a different system for you to work with. I've turned on the RSI Momentum indicator again, and it shows us divergences. See how conveniently the divergences are positioned, right in the resistance zone. And it's like this actually strengthens our signal. Or rather, not exactly. It's more like, if we have a divergence at a certain point, let me show you again on the replay. Look, the divergence hasn't formed yet, there's a cross, another cross, and now the divergence is forming. And it's like this isn't such a bad entry point after all. Plus, we got this signal pretty quickly. So, not after 1,500 years, but right now, it actually seems like a decent entry point. Well, if we turn off the replay, we'll also see that, in principle, as practice has shown, this point, just recently, was actually a very good entry point. And at the very least, the price returned to the middle of this channel, which is actually not bad. And what's also interesting is that this indicator has a feature called a broken divergence. So, for example, when a divergence is broken through, a constructed divergence is broken, and then a second divergence forms, that's an even stronger signal for a reversal. See, here again is the divergence. It was broken, and there was a pretty strong bounce. If we move over here with the replay, we can see the broken divergence. So that means they took out someone's stop losses. The stops were above this peak. They got taken out, and this could also be a pretty good spot, a good entry point. especially since there's confirmation, another divergence, so it seems like a decent entry point. And as we saw in the past, this point would bring us profit. Well, the system only uses 2 indicators, but it turns out to be pretty interesting and functional. When I saw it, I thought, damn, this is actually really cool. Even despite the repainting, which, by the way, wasn't mentioned at all in that video. It looks good, like you could test it out and see for yourself. Oh, does it work or not? I decided to turn it into an algorithm, because I run a channel about algorithmic trading where I tell you about, and teach you how to create and trade with robots. If you're at all interested in algorithmic trading and the opportunities it offers, especially now, when neural networks can write code of almost any complexity for you, code you might never have come up with yourself, not getting into algorithmic trading, in my opinion, is a crime. That's why I have a Telegram channel where you can chat with me, and where you have access to the strategies I've already created and launched. And they're working. There's also a channel with signals, where these strategies provide public signals so you can see and evaluate their effectiveness for yourself. It's definitely worth subscribing to if you're at all interested in algorithmic trading. Alright, that's enough self-promotion, let's get back to the strategy. I've turned it into an algorithm just the way I showed you. Divergence, we broke through the divergence, entered this zone, got across. And then we went down. And, of course, if you get all of this from below, you go up. Let me show you what kind of results this strategy can achieve. So, I built a strategy based on the indicator. As you can see, when we have a confirmed signal and there's a divergence at that moment, we enter the market. We set the stop just a little higher. Naturally, I tried to fine-tune the strategy parameters for this asset. This is a 5-minute SUI chart, and the take profit is set like this, so we have a pretty decent profit factor. And let me show you what we can achieve with such a simple strategy. Here's the result. It kind of moves a little to the right and a little down. So, well, you can't really call this a profitable strategy. At the same time, only 50% of the deposit is used here, because that's the more correct way to test. There's no pyramiding, and I set the commission at 0.05. That's the commission of the exchange I trade on. I trade on BingX. If your exchange has a higher commission, then use my referral link, join my copy trading, and we'll trade together. As you can see, in normal mode, the strategy, well, it kind of doesn't really want to trade, right? So, basically, we took a visually appealing and seemingly interesting strategy, and by using neural networks and algorithmic trading, we quickly realized if we follow these rules every time, using only these rules over and over, we won't achieve success. Well, at least not on the 5-minute time frame. So what should we do then? Should we just give up and throw out this strategy as unprofitable? Not at all. Now I'll show you how to actually work on a strategy. Algorithmic trading involves a process of thinking, refining, and perfecting a strategy. Let me show you how it works in practice. Let's assess what else we can see, what data we have, and what additional information these 2 indicators are giving us. First of all, they provide us with buy power and sell power. In other words, the values themselves can play a role. So, for example, if sell power is less than 60, or maybe 58, maybe we shouldn't enter this trade at all, right? Or if buy power is below a certain level here, maybe we shouldn't enter the trade in that case either. And also, look, we usually see a divergence in the opposite direction here. So, if a divergence appears in the opposite direction, it means the market no longer agrees with what's happening. And maybe we should close the trade or, for example, even reverse the trade right here, but in this particular case, it turned out that this wasn't true. But I assure you, there are so many cases in real life when, if we see a divergence, it's better to exit the market, because this pattern could turn out to be a bullish flag and just shoot up into the stratosphere, taking out your stop losses. Let me enable these functions in the strategy. Of course, I've already written them. Let's turn on the long filter threshold and short filter threshold. I've already set them up through trial and error to 64 for long and 58 for short. And I also enabled the function to wait for signal checks, filter checks, 2 candles for long and, well, 1 candle for short. So, there won't be any additional waiting. Let's see what this gives us. Well, it looks like the strategy has almost broken even. And I moved it to the left so you could see better where the strategy ended up. And it seems like things have gotten a bit better, but it's still not a martini. So let's keep thinking about what other data we have. We can measure this channel, look, 314, 334. So we can measure the range of this channel, for example. When the channel is really narrow, like if we move it over here, we've moved it into a flat, and do you see how small the channel is? It seems like there's no point in trading in this channel. No matter what signals appear here, this channel is just flat, and there's no sense in doing anything in it. So let's also try to start calculating the height of this channel and the ratio of these variables. For example, when we're trying to buy, let's say that buy power should be greater than sell power. And when we're going short, sell power should be greater than buy power. Let's make that assumption and add it a bit to our strategy. and I'll just turn it on, since I've already added it. I've enabled it. Look, the minimum channel height should be 3%. So if the channel height is less than 3%, basically, we don't enter the trade. And I'm also enabling the ratio between buy and sell. At the same time, look, notice that my threshold buy sell should be 1, meaning buy must be at least 1 unit higher than sell for us to enter a buy trade. And for sell, this value is -7. So, basically, sell always works differently, because short and long movements are always different. And, accordingly, here I can have a difference down to -7, and it will still enter the trade. And here's the result we managed to achieve. It seems like we're already trading in the green, but it's still very uncertain, and there are periods with a lot of stop losses and prolonged drawdowns. And this is where this rule comes in handy. When we get a counter divergence, if we're in a short position, we need to exit the position. If we get a short signal while we're in a long, do nothing, just close and reverse the position. Let's just set it to close and close, without any reversals. And we ended up with a much more stable strategy that works even on the 5-minute time frame, which is considered very challenging in algorithmic trading. This is how you can bring almost any strategy to a positive result. You just need to think it through and put in the effort. This is how modern algorithmic trading works with neural networks. All the materials, as I mentioned, will be available via the link in the description on my Telegram channel. And don't forget to subscribe to this YouTube channel. See you all later.